Hello, my Life with Crypto brothers and sisters. Welcome to another Money Monday crypto training. I'm your host, Kelly Sunshall. Today, I will continue talking about the basics of technical analysis, focusing on trend lines. Specifically, we'll discuss support and resistance lines. My goal is to keep it short and understandable for extreme beginners, but don't be fooled by the seeming simplicity of today's topic. Next to candlesticks, trend lines are the next most important and misunderstood tool in trading. So let's get started. Before we begin, let's understand a few more trading terms. They will help us in what we're going to go over here in just a moment. What is a diagonal trend line? A diagonal line, trend lines are lines drawn on a price chart diagonally to highlight a trend or price range. They follow price movement up or down and provide traders insights into how high or how low a price might go. Horizontal trend lines, on the other hand, are drawn on a price chart to highlight consolidation of price and potential reversal zones. What is FOMO? Everybody should know this. It's the fear of missing out. And it means chasing a trade and following the crowd without research or a good reason. And right now, that appears to be happening with Solana. What is chart pattern? This is a predefined shape historically studied by chart technicians, and they are fractal in nature, meaning they're repeating patterns, and traders like to use them to try to predict future price movements. Support line. A support line is a level on a price chart indicating where buying interest is sufficiently strong to overcome selling pressure, resulting in a halt of declining prices. And a resistance line is a level on a price chart indicating where selling pressure is being overcome by buying pressure, causing the price advance to halt. So as a reminder, where can you study charts? I highly recommend tradingview.com. It's a great place to get started. They have a free version and they have a low-end paid version. So I used the free version for many years, and I now use their low-end paid version, which is their essential subscription. So let's talk more about technical analysis with horizontal trend lines. In technical analysis, trend lines are a fundamental tool traders use to anticipate potential price movement turning points. Swing traders often use these to identify entry and exit points or potential entry and exit points. So horizontal trend lines are lines drawn across specific swing points on a price chart, and we will be looking at some examples here in just a moment. They represent support or resistance levels where the price has historically encountered difficulty moving beyond that point. To draw horizontal trend lines, you always want to start by zooming out to a longer-term time frame to touch as many price points as possible. Support and resistance trend lines should be easily visible through simple observation. You don't have to hunt and peck for them. You shouldn't have to hunt or study too hard to find them. They should be obvious. And drawing trend lines. First, to create a horizontal trend line, identify multiple points at the same or nearly the same price point level on the chart. Connect these points with a straight line, relatively straight line. It doesn't have to be exact. The resulting line represents a horizontal support or resistance level. So what does this line mean? Well, a horizontal support line indicates a price level where demand or buying has historically prevented the price from falling further. Traders look for buying opportunities on support lines. Of course, they use other indicators in conjunction with the support line, but the support line and maybe candlesticks gets the game started. A horizontal resistance line, on the other hand, represents a price level where supply or selling has historically halted upward movement. Traders watch for selling pressure around these levels. So what are some potential trend line trading strategies? Say that fast 3 times. So we have the bounce strategy, which is when the price approaches a horizontal support line and traders anticipate an upward bounce. A breakout strategy is if the price tests a resistance line several times and then breaks above it, and this could be a signal for a bullish breakout. And a breakdown strategy is if the price bounces off a support line too many times, this increases supply and may signal a bearish breakdown. So we're now going to look at some price charts to give you a better idea of what all that means. So as I said, recognizing horizontal and support trend lines should not be difficult. It should be obvious. So on this chart example here, you can see there's 1, 2, 3 touches for this support line. And you'll notice that I didn't choose the exact bottom of each one of these points. It wouldn't have been horizontal then. But it's okay. It doesn't have to be exact. You want to pick as many points as you can without having too much going on either side of that line. So let's look at one more example. In this example, each of these touch points where the S is definitely just touching the line, not crossing it. So here's another example of 4 touch points for a support line. And the more touches you have on that support line, the less strong it is. And so sure enough, after this last support, it took off. Now let's look at some of the patterns that could happen based on support and resistance lines. Here is a support line with a breakdown pattern. Here again, we have 1, 2, 3, 4 touches on the support line. And sure enough, the 5th time it lost its strength. In other words, the support line wasn't able to hold and it broke down through it. And we call that a breakdown pattern. And I believe I have some more here. So let's look at some resistance lines. Here, this is when the price couldn't bump up higher than a certain point. And we draw a line to those top points. And that's a resistance line. So in this case, we have multiple. We have 1, 2, 3, 4, 5, 6, 7, 8 potential touches of that line. So that's a very good, very strong resistance line. And sure enough, shortly after that last touch, it wasn't able to hold it and it fell down. We'll see another chart with that pattern on it here in just a moment. Here's a resistance line with a breakout pattern. So again, the price had not gone above all these little R's here. There's at least 1, 2, 3, 4 touch points here where before this period of time, fairly recent period of time, the price had not gone above these points. And the next time it touched the resistance line, it wasn't held and it broke out above it. I think I have one more chart on here. Nope, that's the last one. So this is the example of a breakout pattern with the resistance line not holding and the price going above. So I hope that helped all of you or any of you today. That's all I have to talk about for support and resistance lines. It's very important. Mastering support and resistance trend lines along with candlesticks is the foundation for successful trading. You'll need to learn some other stuff, but this is the place where you need to start. And next week, in the final training of this series, I'm going to talk about the critical subject of risk management. So I hope you'll stay tuned and join me then. As always, stay curious, keep learning, and share your thoughts or questions in the comment sections below. So thanks so much. I hope you all had a Merry Christmas. I'll see you next week. Bye for now.